Gautam Shah is Associate Director and Technical Analyst with JM Financial Services, and he's joining us right now. Gautam, good morning. Good to have you with us here. Thanks very much. The so-called impact of Rajan's exit is all but gone. I mean, initial brief reaction, and then the market has bounced right back. What would you take away from this? I mean, it's a brief period so far, but it kind of tells you there is enough, there seems to be enough strength, buoyancy.
Yes, Prashant, morning. Well, this is typical bull market characteristics, and I think I would take away a lot of positives from it. Frankly, I'm not surprised, because if you really look at the market action of the last week and a half, what you've noticed is that despite so many global negatives, you've had a scenario wherein VIX worldwide has seen a huge surge. You've had global markets falling apart. Gold has been rising. Currencies have been all over the place. Yields in the bond markets, have been historic, and the sentiment has been extremely weak. Despite all these factors, you had the Indian markets close flat last week, and I think that's extremely commendable, and it actually tells you how much strength the Indian market had. Because if the market wanted to fall, and if the market wanted to go below levels of 8,000, the ammunition was all there in the last week and a half, and that's something that we were very closely watching. But the fact that the Nifty keeps rebounding from close to 8,050, I think is sending out very positive signals. And it's almost as if the Indian markets are ignoring all the bad news and waiting for some good news to come on the screen globally. And if there is some green on the screen globally, Indian markets will possibly be the best performer, something that you are seeing to a certain extent today. So even though there is a lot of cautiousness ahead to this event later this week, purely looking at the charts, if I were in an isolated room just looking at the charts and not knowing what's happening in the world, I will have to stick my neck out and say that, the event later this week will also go in favor of the markets. That's really been our stand, and we strongly believe that this is a big bull market which is playing out. And you have a scenario wherein the Nifty is just 100 points away from the recent high. And once 8,300, which has been a resistance, has been gets taken out, I think you would see a 5 to 7% rally pretty quickly. And the stopover target that we've been working with is about 8,650, 8,700, and we expect these targets to come by in the next couple of months. But our eventual target for the year is about 9,100, and we expect that to see this calendar year itself.
Did you at any point change your bull market hypothesis over the last many months, last couple of quarters, Gautam? Because the fact is the market has also struggled now, right? I mean, for about a year and a half. It's not as if it's, the high was made and then the correction happened. We sold off pretty strongly, bounced off quickly from there. But after that, haven't really gone anywhere, really speaking. I mean, stock-wise, mid-caps, small caps have done extremely well over the last 1 year, 1.5 years. They've done better than large caps. But at an aggregate level, has the market been consistent in the message that, well, it is in a very strong bull market, or has that message faltered?
No, I think the market has been in that message. Depends which time frame you're looking at. I think I'm of the firm view that May 2014, when the Nifty had taken out levels of 63, 6400, that was the real big, breakout that had happened that gave you upside targets for the next 5 years, and that was a time when we believed that India will be in an uptrend in a very longish phase. And then came a year like 2015, wherein the Nifty lost 25% from the top, from 9,000 to about 6,800. And while 2015 played out, we were probably one of the few technical desks in the country to say that it was a correction in a bull market and not a bear market, because we did not see characteristics of a bear market. In 2015, the mid caps actually did better than the large caps, and all those signals told us that once that correction gets over, you will get back on track very quickly. And see what the market has done in the last 3 months, moving up from 6,800 to 8,300 in such a short span of time, I think is an indication that, things have got back on track, and now the markets can continue to make that series of higher tops and higher bottoms. There will be very short corrections in between, no doubt about that. But I think gradually we are headed towards the highs that we tested in early 2015. And I strongly believe that a base has been created in that 7,700, 8,000 band. So unless this gets violated at any point of time in the next many months, I think the thesis of this bull market staying intact and target of 9,100 plus remains intact.
In this leg, do you expect the market to go to 7,700 and then bounce from there, then rally from there, or no?
No, I don't think so. In a very optimistic scenario, I thought that the Nifty could have gone down to a level of 8,000. In fact, as we are dealing with these global events, we had kept a provision for about 200, 300 point downside from that level of 8,300. But what you're noticing is that the market is not even going closer to 8,000. And the reason is it took a lot of time for the market to cross 8,000. If you look at the last 6 to 9 months, there have been so many times wherein the level of 8,000 acted as a resistance. And once that level got taken out a few weeks back, that level turned into a big support. And I think the open interest in the 8,000 put, I think really exhibits that pretty well. So our view is that even 8,000 should not get violated, but if it does get, you need to keep some more provision on the downside. But our, optimistic scenario is that we don't even break 8,000, 8,050. Eventually, we actually take out 8,300, soon, and then move towards 8,650, 8,700 in the current leg itself.
If the broader market starts to lag behind large caps, is that a signal? Does that tell you anything? I mean, the broader market, mid, small, micro caps starting to fall behind performance-wise, the 50 stocks or the top 100 stocks. Is that a signal that the market is tiring out, or you won't read? Because, I mean, we saw some indication of that over the last 2 months or so.
Well, Prashant, not really. If you look at the BSE mid-cap index or the NSE mid-cap index for that matter, you will notice that they've done pretty well in the last 4 to 6 weeks. They've actually moved in tandem. Yes, in this move from 6,800 to 8,300, they have not moved as well as with some of in line with the large caps. But that's understandable because, the scenario was so pessimistic when we were trading in that 7,000, 7,500 band. If the market had to go up, the larger players in the market would initially look at the larger names, the large cap stocks. And that's the reason, because of the flows and because of the momentum and the liquidity, it was the large caps, which had that first mover advantage from 7,000 to 8,000 plus. But now going forward from 8,300 to our target of 9,100, I think it would be the mid caps and the small caps which will do well. Again, look at the last couple of weeks. Whenever Nifty has had bad days, it's the mid caps which have actually outperformed, and you've never really had very bad breadth. So I would really take all of these factors very positively in the current market scenario.
Okay, sure. How would you look at the global setup before I get to some stocks and all, Gautam? I mean, the S&P, European indices.
Well, Prashant, that's the tricky one, because when you look at the Indian market chart standalone, you feel so bullish, you feel so good about being in this country right now, because I believe it's possibly the best chart in the world right now in terms of large equity markets. On the other hand, if you look at the charts of some of the European markets, they are pretty much in bad shape. And I think there could be some more downside in the European markets. But that does not necessarily mean that India will fall in tandem. Because here what you need to do is you need to look at relative strength comparative charts, which is very unique to technical analysis. It's basically we plot Nifty over DAX, we plot Nifty over the FTSE. And if you look at those charts, you will see that India continues to outperform. So on bad days, it falls less. On good days, it gains more. And I think that's something that we've seen repeatedly in the last 1.5 months. So just based on this relative strength comparative charts, I believe that Indian markets should be safe. And even if the world, sees a little more correction, I really don't think Indian markets will break support levels. On the other hand, if you look at the US markets, we've been of the view that in the next 1.5 months, you should actually see new lifetime highs for the US markets. We were a little surprised when you saw that correction in the last 1 week. I think this is temporary. You have very good support for the Dow around 17,300, 17,500. And our our preferred view is that the Dow rebounds from around this zone and gets back to 18,000, 18,300, confirms a breakout above 18,300 and then goes on to see another 7 to 10%. Well, the news flow in the world right now might not suggest that might happen, but that's something that we actually see on the charts right now.
Yeah. Okay, so I mean the market which is looking weak is European indices, but you think US also should go on to make newer highs. Okay, fair enough.
Yes.
Let's come to India specifically now. Where do you see more strength? Where do you see one should, which sectors do you think one should go long on? Which are looking relatively weaker? Just talk a little bit about what you like and you don't like here.
Well, if you're a believer in the India story, if you like the Nifty, you have to love the Bank Nifty. I think this is something that I've said so many times in the last 6 to 12 months. If you look at the recovery that the Bank Nifty has seen in the last few months, it's phenomenal because, it was trading at a level of 13,500 and it came all the way up to levels of 18,000. So that's a very big move for a mainline index. And this is in the backdrop of PSU banks not doing so well. But I think when I look at the structure of some of the private banks, I believe that there is a lot more upside. I think this correction that we've seen in the last 10 days has really cooled things down a little bit for the Bank Nifty. Even that index has seen a nice 500, 700 point decline from that resistance of 18,000. But eventually we feel that the Bank Nifty is headed towards a target of about 20,500. That basically corresponds to our Nifty target of 9,100 for year end. And from a next 2-month perspective, I think 18,700 is the target that we are working with for our clients. So any decline towards 17,000, particularly in the private banking space, I think one can look into. I think this is an index that will outperform. Apart from this, I think two other sectors that we like is auto. I think auto has been the evergreen sector in the Indian markets. It's possibly been one of the best performers if you look at a 5-year time frame, at least in the larger names. And I think auto as an index will continue to do well. And it's an index that does not do badly in the bad times. So that's the best characteristic about the auto stocks. And in the good times, the momentum itself takes it 5 to 10% higher. So I think auto would be a second on list, followed by capital goods, which has seen substantial damage in the last 1.5 years. 2015 was probably the year where capital goods and metals were the two sectors that were hit the most. And now with the kind of recovery that we've seen in the last 3.5 months, I think there is a lot more to recover. So I wouldn't be surprised if capital goods index gives you at least 20% in the next 6 months, which I think is big money if you look at the large cap stocks.
Are you talking about the index or you think one or two stocks there? Because they're also in capital goods. Within capital goods, there is a lot of variation, right? Different teams, some have done relatively well, some have done very poorly.
Yeah, I would like to, I cannot talk about specific stocks due to compliance restrictions, but I think the top 5 or 6 names in the BSE Capital Goods Index is something that, we would like to highlight.
Right. So auto and capital goods is, and banks, right? Nifty Bank, capital goods and autos are the 3 best bets according to you. And what do you don't, what do you don't like? What are the sectors that you think will underperform, absolute and relative?
Well, there are no sectors in the market, which are looking weak as such. So there's nothing really on the short side, frankly. But yes, sectors like technology, maybe healthcare, I think with what healthcare has done in the last 3 months, I think these are the 2 sectors which would probably now turn range bound. So even as the market goes higher, these stocks will just be ranged. And even if the market goes a little lower, I don't think they're going to break down as such. So if people have positions in some of these sectors, it's prudent right now, to get out of them and create positions in some of the other sectors I mentioned, because they are more high beta, they are likely to move in tandem with the markets. And I think healthcare as a story has played out a little too much in the last 3 years. So there is a lot more in terms of time correction that's going to go on there. So I really don't see too much opportunities, in that segment.
All right, fair enough. Metals, mining, which have seen large bounces. Many are saying that, well, the moves in a way just started. What's your view?
Well, absolutely. In fact, metals, according to us, is the dark horse for the next year and a half. This is not a trading call. This is a call purely from a buy and hold perspective for the next 12 months. Because if you look at the last 2 years, the damage in the metals index was huge. I mean, if you look at the BSE metals index, it lost 60% in value in the last couple of years. And gradually it's built a strong base in the last many months. And it's now seen lovely breakouts on the charts. I mean, look at the kind of move a stock like Hindalco has given you, Tata Steel, JSW Steel. I mean, these are moves that you've not seen in 5 years. I think they've actually moved like mid caps. And I think there is a lot of upside for the metals index. But please do not play it week to week or month to month, because this is a sector which sometimes can underperform for a very short period of time. But if you look at the bigger picture, if you take a 12-month view, I think from here I wouldn't be surprised if this index gives you about 40%. So that's more of an investment call to your audience.
Okay, fair enough. We'll leave it there. Thanks very much for joining us, Gautam. Appreciate you being here today. Thank you.